A lot of people wanted me to stream because the market's down a lot. My thing says Bitcoin's at $4. That is not true. Maybe soon, but not right now. It'll be an interesting day today for sure. Yeah, on days like this, I always, I'm a short seller. One of those bad people that likes to short stocks and other assets. The day I got out of prison, actually, I said that I made my first video back from prison was about short selling and how it's important to learn how to short sell, because it's actually sometimes really, if you don't do it regularly or you've never done it, it's actually pretty easy to learn how to short sell and identify kind of bad companies and bad assets. Like it's pretty easy actually. So if you can determine in some sector what the worst assets are, you make a lot of money shorting, and you can still buy all the other assets you like. And some people call this a 130-30 strategy. So, or at least maybe I should say the 130-30 strategy is similar. Look at IONET, $1.30. Woo! It's still $1.30 too much, as they used to say on Wall Street. I have a lot to say about this price retracement or whatever you want to call this, but before I get there, short selling is so take crypto for example. In crypto, which is its own weird asset class, which I also want to talk about, there's a token called IONET, and I've exposed them, and 𝗏𝗏 token, and it's just a piece of trash. And so if you like Bitcoin a lot, let's say in your portfolio and you own a bunch of Bitcoin and you bought it at 60K and now it's at 50K, like that's not really a big deal. And it's much less of a big deal if you were short a really crappy crypto, let's say, kind of thinking about Bitcoin being a good crypto for now, and you were short IONET and it was $4.49 and now it's $1.33. You made a huge profit, and that could have offset your Bitcoin loss, or even more than offset it, like not just, mitigate it, but completely offset it, and you'd actually be up. So, it's not hard to see some of these good shorts. Like IONET barely ever went up. It was up for like maybe a day or two, and it's been down ever since. Shorting is not something to be afraid of. In biotech, it's very easy to figure out which companies are real and which ones aren't. So anyway, short selling is always something worth learning. Now let's talk about this decline. I think people usually get really scared when declines come quickly, but they get less scared if declines come slowly. And this is like a Bayesian phenomenon. If you look at a chart of the S&P, you really have to be crazy to think that, this represents some massive drop. And I think like this looks pretty bad, but so did this. It looked like it was all over. That was just 2 months ago. And if you scroll back to a year, this kind of starts to feel a little stupid. Okay, we went from here to here, but the chart starts down here. You go back even further, you can barely see this drop. So, and do you remember this drop? So we've kind of had this like straight line up since 2008, in essence, other than COVID. And we actually had this like huge over investment in this 2021 period that we're still digesting, quite frankly, in my opinion. So again, like if you look at a 10-year chart of the S&P, yeah, I don't see what anybody is really concerned with or thinking about. But that's because of the Bayesian inference of humans. We tend to overthink new information, and we tend to react poorly to new information, integrate it poorly. And this is no exception. Like market's down a lot in the last week. Well, markets kind of like part of what markets do is they gyrate, and this is hardly. It really depends on what you think the trend line is. Like even the '08 drop looks like meager in retrospect to the general trend of the S&P, which has just been up and to the right forever. It doesn't mean that you can't have like a multi-year period where prices decline. And I do think you have to be prepared for that. But again, with short selling, there's really a sort of solution there. The other solution is cash.
if you don't have, if you don't want to short sell or you don't think it's a great idea or whatever, you can certainly do cash or puts or something like that. There's always that sort of option. One of the things that's worth looking at is the yield curve. And then there's also a couple of other kind of important pieces of information. You got the political kind of dynamic as well. Take a look at some of the CDS and yield curve and stuff like that. Like CDS is another way to look at if there's real fear. You know, VIX is one thing, but like look at the CDS on, you know, important stocks or countries. That's kind of more interesting. When people start talking about countries defaulting, that's when I get excited. You know, we're pretty far away from that. Let's see where the Italian CDS is. 74 basis points. That's nothing. So you want to make a real fortune, start buying these CDS. Start spreading some rumors. That's what I'm talking about. Make the whole country of Italy crawl to its knees. What's up? Is it over for BTC? No, it's not over for BTC. But I think your portfolio should be able to withstand years and years of pressure. And if it can't, you know, you shouldn't be investing. Why did Buffett sell Apple? Buffett made a lot of money in Apple. You know, Apple management, you know, usually, I mean, I think his new stock pickers, which aren't really involved in Apple, but Buffett's also very old now. I think he may be planning or thinking about death. In a lot of ways, I don't know what his thinking is specifically on Apple. I'm sure we'll find out soon. I can ask around, but I mean, it's a huge position. You know, he's up a lot. Not crazy for him to trim it. I actually think Apple's fine. You know, they're doing quite well. But let's get back to so you know, typically the bond market's like more sophisticated and more interesting than the stock market. So the 10-year is trading at 3.7. Bonds are being bid up right now for obvious reasons. So yeah, the yield curve is slightly inverted, which is a little worrisome, but that's a signal that is not that reliable. So yield curve inversion doesn't always precipitate a market decline. So keep that in mind. But that's one of the things I look for. There's the TED spread as well. So like if liquidity is getting bad, that's something that's worth looking at. And the TED spread's been very quiet. So there's plenty of liquidity. And I think they got rid of the TED spread. What's the new TED spread? I'm such an old person. TED spread's gone. Yeah, there's kind of a couple of other different TED spreads. So basically this decline is in essence just like you had a bunch of stocks that were up a lot. Now they're up a little less, but they're still up a lot. And I think that's, you know, probably a good way to look at it. And in these situations, like typically I would start to cover shorts and buy the stocks I like more. The problem is that once you start doing that, you lose your downside protection. And if you do that, it can be pretty ugly. You should kind of like try to keep all those things in balance. What else should we look at for recessions and things like that? I mean, corporate spreads are interesting to look at too. Here's the vol chart on Bloomberg. It's pretty wild. But again, you know, rapid price change may not be as meaningful as a not rapid price change. You know, we tend to overthink these things. Like if you look at HRH or something like that, and you look like a weekly return histogram, you know, we're probably going to read in the 1 sigma range, maybe the 2 sigma range this week. Is 2 sigma enough to freak you out? And there's plenty of stocks that aren't really trading that crazy, right? Like look at Visa, the video game stocks. Oracle's down 4%. It's not that big of a deal. I think it's just the beta stocks are down a lot. The Nvidias and Teslas. I mean, anything like tech related. Let's check in on biopharma. Biopharma is usually like a safe haven in these situations. Like AbbVie's barely down, J&J's up. In real crashes, every stock goes down, even the safe havens. So I really don't think there's a lot to worry about here. if you're worried, I think market tone is like my favorite idea in the stock market. If you're worried about this decline, what's going to happen in the next decline? You're going to be jumping out of the window? It doesn't make too much sense. If every decline scares you that much, then I feel like, you should probably reevaluate, your perspective on investing. Like I said, I mean, if this 550 to 511 is enough to freak you out, I don't know what to tell you. Now, if we go to 450 or something, then I'd say that's, or 475 on the SPY or something like that. Then I'd say, okay, that was pretty brutal, pretty quick erase of a lot of upside. But I would still say, let's say you needed to, I could probably draw on this chart, but let me do it a little simpler so you guys can see, which chart is worse, this guy in the black line, or which chart is better or worse that I'm drawing? Or, I'll superimpose for a minute and then I'll do this. And basically I'm just drawing two lines. The red line goes higher than the black line, but rapidly converges to the black line. Which is better or worse? Well, the problem with the red line is you emotionally get very kind of excited about this big upside it had. And then the crash back down to the black line, or the trend line maybe, is very frustrating. But the integral, the area under the curve of the red line, I'm just going to color it in. This is the point of calculus in some ways, is to figure out areas under curves. But this area under the curve is actually like sort of profit potential for you in a lot of ways, at least unrealized. And so, all of this should be joy. And the fact that it returns to mean, if anything, is you should have known you're sitting on cloud nine. And that's where we were for a while, when NVIDIA went up every day and there was people posting giddily about it. Well, this is the reversal of that. And it doesn't mean that we can't go right back up.